Hi all, it's Catherine Burgess with Burgess Group Compass. We are going over Boulder County headlines for real estate and national headlines, and then we'll go into the details a little bit. So last week we saw inventory rising, under contracts kind of on the low end of steady. Those two things together mean there's more inventory to choose from. And we're seeing the same thing happening nationally. So getting into the details a little bit. Last week we had 121 new listings come to market. That was more similar to what we saw in 2020 and 2021 than what we saw in 2018 and 2019. Then by contrast, under contracts were more similar to what we saw in 2018 and 2019. So together, we're seeing those numbers creating more inventory. We are still at the point of a low amount of inventory, but we're getting into the normal range. We're not by any means at a high point. Then year-to-date under contracts remain low. They'll be low for the rest of the year, but this chart is so interesting to give you a feel for the overall essence of what's happened in our local market for the last 5 years. That super fast whirlwind that we saw for the last 2 years is definitely not reflected. So as we look at the activity by price band, all of the price bands have been quiet recently. That's really typical for our summer market in the Front Range. But each one of them, if you look over the past month, each price band has had its day in the sun. There's no section that is not moving, just period, week over week. So last week we saw a lot of activity in the 0 to 500 price band. The rest of it was pretty quiet. So there should be a fair amount to shop from in those other sections. And then the really important part that we think about with that activity by price band chart is the price change section, which really means price reduction. So we had January to March with almost none. Then we saw a rapid rise in our price change numbers. And then in the last month, it's been up, down, up, down. So we will have to keep watching to see if we are going to have something that's more predictable or if we're in this vacillating trend. The reason we keep track of that so thoroughly is it reflects the seller confidence. Right now, it's a coincident indicator for seller behavior and confidence. So it's good to know what kind of hold sellers have on the market, and this tells us that. So when we look at the national numbers, it's really similar. So we're seeing longer days to sell. We're seeing it take longer to get under contract. And then we're also seeing that list to sale price ratio coming down. So fewer buyers are paying over asking price, and we're seeing that come closer to 100%, though it is still nationally a little bit above 100%. So then with regards to buyers, on the buy side, fewer people are searching for homes for sale on Google. We saw mortgage applications down 19% year over year, 7% week over week. So you can see that cooling. And then showing time, which keeps track of all the showings, shows us that there are a declining number of showings right now. So the takeaways are that for sellers, we still have a low amount of inventory in all segments of the market except the luxury market. Let's talk. If you're a luxury seller, let's talk. It is still possible to be successful there, but it has become a buyer's market, so it takes a different strategy than before. And we can talk that through. Then on the buy side, it is a time when there's so many fewer buyers. It's a great opportunity for buyers to get under contract when there's a little bit softer pricing and fewer competitive offer scenarios. So the interest rate is still at what has been considered low historically. It's higher than it used to be, for sure, but it's still, relatively speaking, a very low interest rate. With the anticipation of an upcoming recession, typically interest rates are lowered during a recession. So many buyers are taking the strategy of, we'll go forward now, we'll get under contract with something that we love in a friendlier environment, and then we can refinance later when the interest rates come down again. So call us with questions. We are happy to be a resource. We'll see you again in 2 weeks. Please like, subscribe, and share.